Hello, fellow traders. This is TheRumpledOne coming to you on Tuesday, March the 7th. The year's 2023. Let's talk trading. How to fix your trading problem, part 6 with Walmal. These videos are for educational purposes only. Your results may differ from mine and from Walmal's. Well, first, I'd like to thank the traders who have given us some positive feedback on this series. It sounds like we may have helped a couple of traders out there. And you know, part of fixing your problem, as I mentioned before, is you have to identify the problem. But sometimes you have to make sure you talk to yourself properly, because sometimes you can just beat yourself up when that's not helping. But other times you can give yourself constructive criticism, and that is helpful. And so it's like today, I've had a really, I guess you could say horrendous trading day. I'm up, but I really rode some trades down. And on the other hand, I looked at my trading journal, and I only have 2 trades over a pip. I mean, it's just like, what the heck is going on here? I mean, normally I can pop out 2 pips, 1 pip, but I mean, only 2 trades out of about, I don't know, 10 trades over a pip. So it's like, what's going on? I have to figure that out. You know, maybe it's, I know I'm a little slow today, I'm tired, and that just might be it. Maybe my reaction time getting in is too slow, and which means I get in a little, away from my target, maybe by a half a pip, and then I'm too quick or too slow to get out, and maybe I let price move back on me half a pip. So right there, that could be the pip right there. So what I'm doing is I took time out to do this video, take a little break away from the screen. Maybe I can reset. I've got Walmal on the line, but he's got a tiger by the tail right now. He's in a trade. That's why he's not talking, if you're wondering. And I put up this grid here with the sweet spots, the psychological lines in yellow, and then every 5 pips in green. And it's one of those things where, this to me is your trading template. And what I'm trying to say is, you're not worried about the method at all here. That comes later. This is focusing on your money and risk management, and this is focusing on your brain. Can you take the trade at the line with the candle color? I mean, you could see here at the 80, if the candle color was green, and it went up to 83.3. So you could have pulled out, 2 or 3 pips out of that trade if you were quick enough, depending how fast it moved back. And we're coming to the psychological 75. We just hit it. It broke it. Did you take the trade? If you're in that trade, you can see you're right about flat right now. Does it push down? It's pushing down. There's a pip. And see how quick it moved back? And that's what happens sometimes. So now you're in the trade, you get a second chance, and then you see just how fast that moved back. Now, what's causing that? There's buy orders there. Obviously, traders are buying. They're taking out those sells.
You're exactly right. That's exactly what's going on. That's where my battleground is, and that's where I need to get out of my trade. And it's just not staying there long enough for me to get out.
Yeah, I know. Look at that. It just reversed hard, hit the 80.
Yeah.
So, I mean, right there's a perfect one where you can see there's only a pip. And so maybe you sit back on your haunches, and then all of a sudden you're looking and you're down 8 pips.
Yeah. And the thing is, we got Powell is going to speak and actually has to testify under oath to the Senate in a few minutes, and maybe that's what's causing some of this, irrational market movement right now. It doesn't explain what was happening to you earlier in the day, but it does certainly go and explain some of the things that, are going on right now at this very moment.
Right. And here we go. Oh, go ahead.
No, I was just going to say, and that's part of that, self-talk that you were talking about. Am I making bad decisions because I'm making bad decisions, or is this happening just because of market condition? And you have to go and evaluate that.
Right. And so I just moved the chart down to 1 minute. Now, I don't recommend this. When you first start out, I'd say, 15 or 5 minute would be better, but I put this up here just to show you just the price action at the 75, what it's doing. And you can see here, it hit it, and then it broke it. It came down, broke it again, reversed. So you can just see all that price action around the psychological 75.
Yeah, it's 1:45. If anybody hears all the dinging from my clocks right now, but that's what that's all about. Just gives me a heads up about what's going on. And here we talked about, you and I talked about this earlier today, and it's sort of like a lot of times, we sit there, we beat ourselves up, and we can't beat ourselves up, but at the same time, we need to be honest with ourselves. And it is a fine line to go and draw. It certainly is, and we need to be very careful about that. And because if we're not being honest with ourselves, the only person you're fooling is yourself. The market's going to not be fooled by you not being honest. But at the same time, you can't go and take it to the point where you get paralyzed because of fear, or paralyzed because I can't do this, and all those other things that can go and run in and cause all types of troubles for you.
Yeah, and if you look at what the market's doing here, you can see it's not closing above 82. It hasn't closed above 82 in almost an hour. So.
Yeah. So it's actually, we like to go and say that that's acting like, it's a ceiling. You just can't get past that ceiling. But we also have, it's putting in a shelf around 75, which is, why I'm battling right now, because I'm trying to get just to if I could just get to 75, a little bit below it, stay there just long enough to get out.
Here you go. Here's your opportunity. Here you go. It's coming.
Yeah, I'm not quite there yet.
It's coming.
I got
it's coming. It's going to break it. Here we go.
I hope so.
I think it's going to break it here. We'll see. Nope.
Nope.
See, that's why you can't trade what you think. You have to trade what you see. And here we go. It's pushing.
Exactly right.
It's pushing. It broke it.
Yeah. And my EA took me out. So we'll see how we did on this.
And there it broke it big time.
Yep.
And then look what happened. It just took it right back.
Yep, took it right back out. And that's, that's why I love having an EA for me, because it takes some of the think out of it. And when I say an EA, you can do this just as easily without an EA, just by setting TPs out there, target prices out there. And the nice thing about it is I needed to get to a particular price, so I could get out with a profit. And at the same time, I set all my stop losses, because I was in multiple trades there. I set my stop losses where they needed to be in order to go make sure I didn't violate that rule, and that's the important thing, and, Kira, you just said something, you said, I didn't like the word you used. I think you used the word, your trading was horrific, okay? And the thing is, let's just be honest about this for a second, okay? You don't know if your trading was horrific or not, okay? Not at this point, you don't know. Because the only time you can go and say your trading really was horrific is if at the end of the day, or at the end of the time, of you sitting down, pencil and paper in your hand, and figuring out, why did I get into this zone of making a mess? Okay? Did you get into that zone of making a mess because you made mistakes, you were late, you were tired, you were this, you were that? In other words, put the blame, assess the blame where it needs to go, which is on your shoulders? Or did you get into a mess because the market just wasn't doing or wasn't behaving, and wasn't doing what you expected it to do? I mean, how many times like what you said, you said this is like the third or fourth time it's going to finally go and break that 75, and guess what? It didn't. And then it finally did break it. Well, what did it do? It only got down to 72, turned around and ran right back up again. And that's just because of market condition. If you had gone short, at the flip flop box, you would have gone short somewhere around 78. I'm guessing right now because I don't have a measurement tool on my chart, but it'd be somewhere around 78. That would have been a good chart, a good trade to take that short, and because you had an imbalance or a return bar that would help you out. You had a lot of things. But the problem is it hit down there, and the first time it hit down there, it literally hit that number where I'd want to get out and immediately reversed back out. That didn't reverse out so quickly because it must have painted that candle. My EA didn't even take me out, and it's sort of like, if the EA couldn't get me out, that tells me that that was a painted candle. In other words, what happened was the candle literally just got painted on the chart. There was no movement to it, and the computer didn't have time to react to it because we were already on the next price,
Right.
On the next candle.
Right.
So, evaluate correctly is, I guess, what I'm trying to say.
Yeah, and
Evaluate
there's one, thing to consider when you're doing the evaluation is if you evaluate it based on criteria that you didn't use, then that's not a fair evaluation. So for example, if you entered a trade, but you didn't look at the return bar, or you didn't look at, the previous day's low, or something to that effect, you just didn't look at it. It's either A, that's not part of your trading plan, and so now you can't use it, or B, you made a mistake and you didn't look at it. And, and on top of that, you can really play revisionist history. You can start looking at everything when you look back. But if you've got too much stuff on your screen, like one of our buddies, I think I've been telling him that he's got way too much on his screen, there's no way you can evaluate all that. That's why if you put this simple grid up on your screen, with the psycho lines, one color, and then every 5 pips, another color, and you just trade those lines, then you can hone in on your money management, and you can work on your brain management. When you get those two things down, then if you think there's a method out there that's better than this, then you go right ahead. But I mean, this right here is pure trading,
Yeah. Now I'm gonna go and tell you the other side of that story. Sometimes they can get tough, because of it just you like to call it yourself Mr. Inflection Point, and it can happen, and but the reality is if you stick to it. Now I know you don't have very many pips in the bank today, but you're still on the positive side because you stuck to it.
Right.
And if you just keep on playing it, you'll get up. And the nice thing about it is, you'll get those good days that happen where the market gods smile upon you. And I've seen you get 50, 60, I've even seen you get 100, because it just works out that way.
Yeah.
No difference in the method.
Yep, and you know what, fellow traders? Fastest 15 minutes in trading is up again. But I hope you take some of this to heart. When you talk to yourself, make sure you're not beating yourself up. Make sure you're giving yourself honest, constructive criticism. So when you're at your trading platform and you're trading, you can focus on the money management, the brain psychology, and sticking to your trading plan, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.